FTX has gone into bankruptcy. I'm going to tell you, what is FTX? How did it even get so big? What are the red flags that we should have been looking out for? What is FTT? That's something you guys need to really know about. And a virtual bank run, a run on the bank. I am going to explain it all to you and what you need to be doing so that these lemons do not become a full loss. So what is FTX? FTX is a digital coin exchange, a platform where people like you and I can buy and sell digital assets like Bitcoin, Dogecoin, Ethereum, all of these other coins that we are hearing so much about. These types of platforms have really gone to the next level in recent years. And why has that happened? How did these platforms become so big? Well, let me tell you, most of them started in 2019. What happened when we turned the corner in 2020? In 2020, we went into COVID. People were at home. People were on their computers. And guess what? They didn't have anything else to do. So they decided to start investing. Everybody was looking for that way to get rich quick, right? There's a little bit of extra money in our pockets. So this gentleman started FTX. And I just want to tell you guys, this gentleman is 30 years old, running a multi-billion-dollar company. Hold on a moment. 30, multi-billion-dollar company dealing with people's finances. I don't know, but how much does he really know at 30? He knew enough to get people to invest in his company. And how did he do that? He got people that were influencers out there in the real world, in the sports industry, to market for him. We follow people that we like. So through all of that marketing, people started investing in his company and buying crypto through his company. That's how the company got to be so big. But here are some red flags that really we should have been thinking about. Bitcoin went from $10,000 a coin to $64,000 a coin at the height of the Bitcoin market, right? The height of the crypto market, it was at 64,000. I mean, the money was just going up, up, up. We had people out there talking every day, people that own companies talking about this crypto industry and these coins. And so everybody started rallying behind it. That was the first red flag. Sam, what he ended up doing, he also created his own digital coin called FTT. And what he also did with FTT, he went and created another company, which was called Alameda Company. They got a hold of the balance sheet and they saw on that company's balance sheet that the company owned a lot of FTTs from FTX. And someone thought, hey, if all of a sudden these FTX coins start to go down in value, FTX company is not going to be worth much. When that story got leaked, you know what happened? The owner of Binance decided that he was going to sell all of his FTT holdings. And that started the run on the banks. A run on the bank is, if we all stopped right now and we all went to the bank right here, right now and demanded our money, guess what? We're going to get a rude awakening because the bank is not going to have our money. And I know you're probably thinking, Carla, what you talking about, Willis, right? They're not going to have our money because the bank doesn't have that much liquidity if everybody went to get their money. So that's what happened to FTX. Once the owner of Binance made that announcement, everybody started cashing in. FTX said, hold on, we're not going to allow anybody else to cash out their money. Everything is going to be on hold. Wait, what? I can't get my money? Huh? Hello? That's how it all started. Shortly after that, the gentleman that owned FTX, Sam, all of a sudden stepped down as the CEO of the company. They appointed a new CEO. Sam is out of the country somewhere. I don't know where he is. I'm sure they're looking for him. So when the CEO took over, he found there was $400 million of assets missing in their preliminary investigation. I'm trying to figure out where that $400 million go and who could possibly have it. I wonder if you guys are thinking what I'm thinking. So the CEO then files bankruptcy. So now FTX is in bankruptcy. So what does that now mean for you? Well, let me tell you what it means. When a company files bankruptcy, that company is saying they are insolvent. That company is saying that they do not have the money to pay back all of the people that they owe, including you and anybody else that was invested in FTX. The chances of you getting your money back are slim to none. I will probably become president before that happens. And this is just keeping it real with you guys based on history of companies filing bankruptcy. What can you do so that this whole thing doesn't become a complete loss? What can you do from a tax perspective? Well, I want you to realize from a tax perspective, you need to take an action. You got to create what we call a taxable event. A taxable event is where you sell off what you have left. I don't care if it's worth $3, $2, whatever it's worth. If you want to get a write-off on your taxes for the loss because you don't have the money and you want to get the write-off and you want that write-off sooner rather than later, you're gonna have to create a taxable event, which means if your account at FTX went from $5,000 to $5 and you want that write-off, then you need to sell today at the $5 value that you have. And I know you're probably thinking to yourself, well, Carla, if I do that, I am not gonna get any of my money back because I sold it. Well, I'm telling you, and you're hearing it from a great source, you're probably not getting it back anyway. So you might as well get a great tax write-off, or you can wait and get that letter from the bankruptcy court telling you you're not getting anything back. And then you can take a tax write-off later on down the road, years later. But realize that money is better written off today than it is years from now because of the time value of money. So my advice would be create a taxable event for yourself, sell it off right now, get a tax write-off because you're probably not going to get that money back, but at least you can get a tax deduction. If you don't do anything, I don't care that they're in bankruptcy, you will not get a tax deduction until that bankruptcy case ends. So you need to go ahead and do that right now and make some lemonade out of those lemons. At the end of the day, now that you know better, you know the tea, you know exactly what to do, you have to do better. Now's the time to take an action by commenting, and subscribe so that I can continue to educate you on all things tax.